late night, ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back. So today we're going to jump in. We're going to talk a little bit about some news that we have, some earnings from some of the companies we watch, and then take a quick look at the charts, see what's going on. Without further ado, we're just going to jump right into things here. So getting into the news, we see tariffs back in play here. So it's not a surprise if you follow me in this channel. We've been talking about these tariffs for the last few weeks. So I'm definitely not surprised to see this coming in with an additional 10% tariff on Chinese imports here. So I don't expect the Chinese government to just take this laying down. They're going to hit back with their own retaliatory tariffs here, so we'll see kind of what happens, but not ideal for the macroeconomic side of things here. Also, more tariffs on Canada and Mexico in addition to the ones on China here. So set to commence on March 4th, 25% tariffs for Canada and Mexico, despite the fact that Canada and Mexico did give in to the demands that the Trump administration had asked for in terms of investing money or troops into border security. So I do kind of expect that to just continue going on throughout kind of the next foreseeable future. They're just going to keep using these tariffs as kind of a bully tactic to get what they want. But we do see more tariffs for Canada, Mexico, despite what he said, and more tariffs for China, which I do expect retaliatory measures. Also, I do expect retaliatory measures from Canada and Mexico as well. This is not a good thing for the macroeconomic side of things. It does increase the tensions and potential for a further trade war. It's not something we want to see. Flipping over here at our U.S. Consumer Confidence Index here, so a sharp downwards tick here in consumer confidence. This is as a result of the tariffs, because people are understanding kind of these tariffs and a trade war is going to be inflationary in nature. Because it's inflationary, it's going to prevent the Fed from being able to cut rates, and essentially everyone's counting on the Fed to be cutting rates so we can go into a period of quantitative easing. Right now we are in a period of quantitative tightening, so pretty tight fiscal policy doesn't allow for kind of crazy speculative investments or people to have access to the same amounts of liquidity at a cheaper cost. So we want to see rates coming down, but if we see inflation going up, then the rates are more likely to hold at these higher levels because they need to combat inflation first. And unfortunately, a global trade war is going to be inflationary. These tariffs are inflationary, despite what the Trump administration is trying to tell people, how it's going to be better for consumers at the end of the day. It's not really true, and history shows that that's the opposite case. I've showed you that before in prior videos. So at the end of the day, the consumer is going to foot the bill, and the businesses will continue providing the same products. Lots of the times the businesses actually end up doing better because they just pass that excess cost on to the consumers, but we see consumers a little bit worried here for sure. This is the largest single month downward movement in this consumer confidence index since August 2021. So just watching this closely, I have been kind of talking as well about the divergence between consumer confidence and kind of the elite or the really rich people in terms of their confidence. So the richest classes, you know, they have all the assets. They're the one, and all the assets right now are at all-time highs. So the rich and the elite kind of have really high consumer confidence because their net worths are at all or near all-time highs, whereas the average consumer, you know, who doesn't necessarily have that excess capital to invest into markets, they're really feeling these inflationary pressures over the years. You know, consumer savings is low, consumer credit is really high, interest rates are quite high, so it's a very tough kind of place to be as a consumer. But we'll just continue following this and see if we do see that consumer confidence continue to drop. It's kind of what I have been expecting here. We do have some bullish news though potentially here. So we had Nvidia reporting their earnings. So yeah, a lot riding on this earnings report here from Nvidia. They reported their fourth quarter earnings. So they had a revenue of $39.33 billion versus the $38 billion estimated, and they posted an earnings per share of 89 cents versus the 84-cent estimate. So they did beat earnings by about 2% or so, 2.5%, and we kind of saw that reflected in the immediate price action during the after hours trading yesterday. That being said, it did flip red for now, so we'll get into the Sorry, we'll get into the chart in a minute here. Basically what we see here, the first quarter forecast implies year-to-year growth of about 65% from a year earlier, a slowdown from 262% annual growth in the same period a year prior. So slowing down a little bit, again, that's just, I think, due to the little bit of a slowdown in terms of the AI So a lot of the AI advancements. We saw the NVIDIA just skyrocketing as soon as it kind of got into that AI side of things. We saw their net income during the quarter rose to $22.09 billion, 89 cents per share versus $12.29 billion in a year prior. So, you know, close to double their revenue year over year. That's really good. Not too surprised to see that, considering the amount of interest they've had in all of their AI chips from a ton of different parties. They reported a 73% gross margin in the quarter. Slight decline in gross margin due to newer data center products that were more complicated and expensive. So yeah, just with the new technology, some of their costs are going to raise, so it might affect some of the gross margins, but a 73% gross margin is still really good. So looking here, we see that revenue in the quarter rose 78%, and full fiscal year revenue for NVIDIA rose 114% to $130.5 billion. Growth here slowing as the company becomes larger, but it also is interesting to note that NVIDIA sales more than tripled, so still a lot of strength from NVIDIA. It said it has $11 billion in Blackwell revenue during the fourth quarter. These are their new AI chips, so these are what everyone's going to be looking to kind of take advantage of. So we see here Blackwell sales led by the large cloud service providers, which represented 50% of their data center revenue. So half of their revenue currently is from these new Blackwell chips. We see Blackwell sales, as well as the previous generation of Hopper AI chips, are reported in the company's data center business as well. This represents 91% of the company's total sales. So we really need to see this AI chip demand continue growing for them to keep excelling in their future earnings, because you see here it basically makes up the vast majority of the company's total sales. So it's going to be really important going forward that they do keep that competitive edge and are able to attract more customers. So we'll kind of see going forward, because as time goes on, more and more chip manufacturers kind of get into the game and start to take some of that market share. We see here, though, the new chips such as Blackwell will be used to deliver AI software in a process called inference. So you see, NVIDIA's business could be threatened by custom chips being developed by technology partners such as Amazon, Microsoft, and Google. So all of these companies are developing their own chips with kind of other companies as well. They want to get the most competitive chip for the cheapest price. But we see here, so the NVIDIA executives are pretty confident that just because a chip is designed doesn't mean it gets deployed. You know, it takes a long time to develop these manufacturing facilities, these supply chains, that kind of things. But as time goes on, it's not out of the realm to expect more of these larger kind of chip manufacturers to really get involved, start taking that market share away from NVIDIA. So we have people like AMD. You know, we have AMD. You've got Intel. We've got all kinds of ones over here. If we take a look, yeah, so we've got Vistra, we've got Broadcom, we've got Marvel. So there's lots of different companies that are involved in kind of this chip manufacturing process here. So we will just be following that going forward. But right now, NVIDIA is the big dog when it comes to AI chips here. We saw their networking sales were slightly down from a year ago. Their gaming business down as well. Reported $2.5 billion in sales versus the expectations of $3 billion. The margins are so much better right now in their AI side of things that they kind of just not abandoned, but put the gaming business on the back seat, you know, definitely focusing more on the actual revenues in AI and kind of the demand for that. We saw they also had $570 million in automotive sales. So that's for chips used for different vehicles that require those kind of AI chips here. NVIDIA said they also spent $33.7 billion on share repurchases. So pretty good to see them, you know, share price growing, their sales are growing, their revenues are growing, and they're buying back shares on the market. So that's good to see from them. I'm glad to see that. Flipping over here, we'll take a look at some charts today, because I'll start here just kind of on the macro side of things. So just mixed reactions trends across the board. We see volatility pretty flat. The S&P just red here, NASDAQ a little red, Dow Jones here in the green, and the Russell Share 2000 here in the red. Gold down for the day, TLT down for the day, so kind of mixed reaction across the board. We've got the dollar showing a little bit of strength here. We can see, just supported by our momentum indicators on the low time frame, we've kind of broken out of this downtrend that we were in. So now just watching this 50-day moving average, we'll probably just come up somewhere around here. We have resistance through here up to the 50-day, probably reject, come back, watch for that lower high. The dollar could kind of bounce and start to show strength here on the high time frame. So if we take a look at the daily here, you look at the dollar, look how oversold it is. So everyone's saying that the dollar is just going to collapse from here and that the top is definitely in. I mean, looking at this, the DMI is heading for that bullish cross, the MACD is heading for that bullish cross after being quite oversold, and the RSI has already experienced that bullish cross, showing that momentum to the upside. We've already broken those low time frame highs, so we have kind of taken out that temporary downtrend structure for now, and we're holding this key level of support that previously marked. So right now the dollar looks fine. It actually looks like it has the momentum to kind of keep going up, reverse that trend on the low time frame, and as you guys know, that's not going to be good for our risk on assets here. See the US 10-year bouncing from that 786 Fibonacci with confluence of the 200-day moving average. These do look like they're still continuing to curl back over, looking bearish in the short term. And yeah, we are in kind of that low time frame downtrend for now, still on the US 10-year. Flipping over to the SPY, looking here, we do see losing a little bit of momentum, kind of looking bearish across our RSI and MACD for now. Still needs to do some more bottoming. It looks like we've come up, tested the underside of the 50-day moving average here and looks to be rejecting for now. So you guys know my thoughts. If we're under the 50-day and we're under the 200-day, that's going to be indicative of a downtrend in the kind of macro scheme of things. So we need to watch this. If we see something like this play out where we continue those lower lows, lower highs, and we break below the 200-day, that's going to be really kind of worrisome for a lot of different assets here. So just watching it for now, nothing too crazy to worry about. We do have some support right through here, so we'll see if it holds. But for now, it's just kind of in that low time frame downtrend structure. Not interested in taking any positions personally. So looking down here, we'll take a look at TLT as well. Another one that I'm in right now. So in that uptrend structure through here, we got above the 50-day. The 50-day is starting to curl up, so that's looking pretty good for TLT. But we do see a little bit of bearish momentum here, looking like on the kind of our indicators here. So we could be due for a little bit of a pullback here. Actually, if you are in this trade, if you have TLT, what I'm going to do is I'm going to put my stop loss up here under this support through here, because we've already kind of moved on into this into decent profits of this trade. Just by de-risking it, rather than leaving my stop loss down here and running the risk of it eventually round tripping and coming back down here, if we do get a risk on environment, I just move my stop loss up. I've now mitigated that risk of loss here, and I let the trade continue running for now. It looks fine for now. It's still in that uptrend structure. I'd like to see it get above that 200-day with the 50-day pushing it up for a kind of macro uptrend. But also, speaking about that, it's going to not look good for risk on assets if TLT continues on a macro uptrend. Looking at gold here, so I did see some people saying that gold was falling like crazy. That's kind of ridiculous when you actually look at the chart of it. It's just up and to the right, continuing that uptrend structure. We kind of lost this low rate here, showing some bearish momentum across the indicators, so we will probably come back, retest that 50-day moving average there. If we take a look at the low time frame to get a better idea, yeah, pretty oversold, but still bearish momentum on the DMI. Until that DMI starts curling back over, we can expect more downwards price action, but there is a lot of buying blocks right through here, so we're kind of just wedged between support and resistance, consolidating over prior highs. So gold still looks good, nothing too worrying about that. We see oil bouncing today, uranium down a little bit. I won't get too far into that. I'm going to flip over to Bitcoin quickly, show you this before we get into a little bit of kind of news and stuff I've talked about here. So looking at Bitcoin, look at this, guys. That's still that downtrend structure, so not really interesting in my opinion. You know, maybe a little swing trade opportunity here and there, but that being said, you just see these lower highs, lower lows. We're stuck between our 50-day and our 200-day. We do have what looks like not quite trying to be a bear or a bullish cross here on the MACD. We'll see if it confirms. and hopefully that RSI can start to really curl back up, put that higher low in, and we want to see this red histogram flipping to green, and we want to see this blue DMI line start to curl up towards the orange line to get a bit of bullish momentum. We're going to need to see some work from Bitcoin before we kind of can have confirmation here. So we want to see those continued higher highs, higher lows before we can kind of hope to go up and retest some of these levels. But notice here we are stuck under this volume profile here. We've got quite a bit of resistance through here in terms of selling blocks, and we've got our 50-day moving average starting to curl down. So it's going to be like we could see a bit of a bounce play from Bitcoin here, but it's going to have to do a lot of work to kind of convince me that it's ready to reverse trend here. So looking at the Bitcoin ETF outflows, that's kind of what I want to show you. Is we've seen almost $3 billion worth of outflows in the last week here in the Bitcoin spot ETF. So look at this. As soon as the outflows are really coming in, that's where the majority of this kind of selling came through here. So we saw all the inflows right through here, outflows, downwards price action, outflows, downwards price action, outflows, downwards price action. We have kind of lost this support rate through here, so we're going to have to continue watching, see if this trend continues, but it's not bullish if we're seeing kind of ETF buyers exit. There's a lot of speculation that the ETF is kind of responsible for a lot of the buying pressure that has pushed us to these current highs, as well as some of the other entities like MicroStrategy and the companies that are following similar strategies. So all that buying, eventually people are going to take profits. So people kind of forget when the ETFs launched, the price was about $41,000 to $43,000 per Bitcoin. So all these buyers who bought on the ETF launch are up over double their money. So not surprised to see them taking profits, especially looking at some of the warning signs that I previously showed in kind of the higher time frame Bitcoin chart. If this was the cycle top, and I'm not saying it is, but we have to be prepared for that potential outcome, then yeah, I'm not surprised to see people de-risking their positions, taking profits still while they have, still while you have 100% profit, taking it off the table rather than risking kind of bleeding to those lower levels. It is interesting to note, though, on the flip side of things, where we have inflows or outflows from the ETFs, we're getting a lot of inflows into Binance here in terms of US dollars. So definitely, don't want to fade this either. It's kind of interesting, Bitcoin ETF outflows, and then we see a lot of inflows in terms of US dollars to Binance. So that is sometimes indicative of a bounce here. But that being said, we've had all these inflows. I talked about it in a couple other videos, and we've just kind of dumped since then. So you can't put too much weight into this, but there is a lot of money kind of on the sidelines in US dollars in Binance right now. We'll actually take a look here, and maybe we'll take a look over at the Ethereum ETF and see what's going on there. Kind of another thing, yeah, we did get these huge inflows, but just flipped right back to outflows. So I kind of wanted to see if maybe we were seeing outflows in the Bitcoin ETF and inflows in the Ethereum ETF, which would signal to me kind of that rotation of capital to the higher risk, more altcoin specific kind of related assets. So that's not what we're seeing. ETFs or ETF outflows across the board in both Ethereum and Bitcoin, not really ideal for us as holders. So I also, I've talked about all these different risk factors in terms of the high time frame, why I'm a little bit worried about Bitcoin and potentially the SPY, and why we might see a little bit of weakness. Flipping over here, though, we do have some more good news. So we had some earnings reports from a couple of the Bitcoin miners we watch as well. Marathon Digital here reporting earnings. They just completely smashed their earnings, mostly due to the FASB accounting standards. So they were able to mark up their Bitcoin holdings, which are almost 45,000 Bitcoin. So that's about $4.5 billion worth of Bitcoin. So pretty awesome, and definitely attributed to a lot of benefit to their earnings report here. So they reported an earnings of $1.24 per share, doubling from 66 cents per share. Analysts actually expected a loss of 13 cents per share on 188 million of revenue. So they smashed their revenue targets, and they absolutely smashed their earnings per share, just completely blowing it out of the water. We did see them up almost 14% in the pre-market, but we've seen the S&P kind of give up some of the strength it was showing, and start to kind of tick down, to dragging some of these miners down with it. They should still be up a decent amount. It was about 7 or 8% last I checked, and we'll get back into that chart momentarily. We see here in Q4 they mined 2,492 Bitcoin. It is down from the prior period last year, but that's due to the halving effect as well as the increase in network difficulty causing a decrease in mining rewards. We see they also purchased 15,574 Bitcoin and did not sell any Bitcoin during the quarter. So that's another thing to keep in mind. Marathon has a blended strategy of mining Bitcoin as well as utilizing debt raising vehicles to purchase Bitcoin, similar to what MicroStrategy does. So it's a kind of interesting blended strategy there. We saw their hash rate increased 115%. They are the largest public miner right now at 53.2 exahash. We see their Bitcoin holdings increasing 197%. Most of that was purchased Bitcoin. So we do see here bringing it up to almost 45,000 Bitcoin. Of that, they have about 10,374 that are lent out to third parties or utilized as collateral for borrowings. So what they do essentially with Coinbase, a lot of these companies, they lend them Bitcoin and they're able to borrow money with Bitcoin acting as that collateral, and then they can use that money to go and fund different operations elsewhere. So we do see that they do have kind of some sort of loan facility with probably Coinbase custody, I would think. So definitely have some access to capital there. We'll flip over. Riot Platforms kind of we'll take a look at the Mara chart right now first to get a little bit better idea. So actually, we take a look at our miners. Back up again. It was up about 13% if we take a look here. Pretty quick little move, bounce up here, kind of corrected down here. Still up 11.3% now, so looking good. We are still in kind of that high time frame downtrend, but we're starting to kind of reverse it on the low time frame here, which is ideal. So we take a look at our momentum indicators as well. Starting to lose a little bit of steam on the DMI here with that blue curling back over, but it might be due to get another little leg up here. The RSI curling a little over. MACD looks fine. We do just need to hold these lows now through here. So we got to hold around $12.30 if we want to try and put in a bit more of a bottom formation. But we are in that high time frame cycle Fibonacci golden zone right through here between that 618 and 786. We flip over to our daily chart here. Looking at it, we're very oversold on the MACD. We have that bullish cross on the daily RSI looking quite oversold. And we also look like we want to see that DMI line get above the orange ADX line, heading towards that DMI minus line. So looking at this, we are still in that daily downtrend. So we need to break these highs, put in higher lows before we can kind of consider Marathon to be potentially bottomed and looking at reversing from here. But a nice little move here from them. Riot also up a little bit. Kind of miners across the board getting a bit of a bounce. Core Scientific up 10% as well. They had some pretty good earnings yesterday in addition to bouncing from this trend line, bouncing from that 618 Fibonacci. Looking like a good setup across the indicators, but still stuck under these highs on the kind of daily time frame. So we still need to take those out. Flipping over here, you look at Riot Platforms. Sorry about that. Quarterly earnings 44 cents per share. So they had an estimate of a loss of 20 cents per share, surprising earnings by 262.96%. So nice little earnings beat for Riot there. We'll take a look at the chart here. Up 5%. So holding these macro lows here, which is good, but on the low time frame, still just lower highs, lower lows, stuck under that 200-day and that 50-day with it curling back over. So more consolidation needed from Riot. Decent little setup on our indicators, but yeah, we'd want to see this these moving averages looking a little bit better. Right now it looks like it's just pushing downwards. So we see over here, once we broke beneath that 200-day and 50-day, we just spent this kind of period consolidating underneath it. If that happens again, then we're probably just due for a consolidation period around here, either retesting these lows or even retesting some of these lower lows down here. So yeah, not getting aggressive on any of the miners right now. We're still recognizing that little bit of weakness in Bitcoin and the SPY. Nothing's durably bottomed or reversed yet, so we just continue waiting, wait for confirmation, and don't get caught on the wrong side of the trend. Flipping over to our stocks here quickly, we see basically we saw Tesla come back, almost tag this gap fill in through here in that 618, getting a little bit of relief here, but still downtrend structure, lower highs, lower lows. Yeah, so downtrend, not too interested in it right now. Watch for the reversal where we might get a higher low, higher high, higher low, and then we could come up and try to retest some of these highs up here. So flipping over to NVIDIA here, we talked about that with earnings. So got a nice little pop into earnings here, but a huge bearish candle, rejection from the resistance here. So just expect more consolidation from NVIDIA, still holding these lows for now. Kind of a bit of bearish momentum across our indicators here. So I'm just expecting more consolidation. Maybe we come back, retest some of these lower levels here. Yeah, so kind of everyone expecting NVIDIA to really just pop on earnings. We saw them run up into earnings right before, about 3%. So I figured that was priced in because they beat earnings by about 2-3%. So seeing that priced in, catching a lot of traders off guard here, you know, a lot of options and so a lot of calls and puts probably expiring worthless on people kind of betting on that. That's why I always prefer shares over options. They're a little bit safer, especially very short dated options. They're pretty hard to time and do it well. So we see the markets are always a little bit smarter, and they're able to kind of manipulate things in a way to just wreck as many traders as possible. That's why we focus on kind of the long-term investing here. So nothing really going on in NVIDIA. We just continue in this downwards choppy price action here, stuck under our resistance line. We'll flip over. We'll look at Amazon quickly, take a look here. Also bouncing. We are just getting above, trying to get above this resistance again. Decent setup here on the indicators, but losing a little bit of momentum. Still holding above this for now. Nothing too crazy going on. So we'll just scroll down the list, take a look at some of the companies we are a little more interested in here. So Dell coming back, not able to really get too much strength here. Big bearish candle, losing momentum across all of our indicators, and I just expect that to come back down. This is something I'm looking at a trade. That being said, I'm not really interested in entering it just yet. I want to be sure that we're seeing more strength in the SPY, but this is a pretty bullish kind of setup here. If we can start to see some strength from kind of general markets, then that might be a decent opportunity here with Dell. Kind of beat down a lot more than some of the other AI players here. AMD also kind of beat down as well for now. So we see, actually we did see AMD when they beat earnings, they popped initially and then just continued their downwards bleed through here. So still in that downtrend price action, not interested in it yet. We want to see that higher low, higher high confirmation. Tempest AI, this is that Nancy Pelosi stock that she just bought. You know, she bought it down here and then this was the result after. So she's just the world's best trader, clearly. She doesn't have any insider information whatsoever. But this is one people were calling for up here. And I said, that's too risky. Wait for it. We're back here at our Fibonacci golden zone, right around that 618 confluence. We want to see a breakout here, a higher low before we're able to kind of continue on there. Looking at Intel, getting a nice little bounce here from that Fibonacci retracement here. If we can break above these highs here and then hold the 200-day, it's going to look really good for Intel and maybe a really good trade opportunity. We want to make sure that we can take out these highs right through here and then look for maybe the higher low entry somewhere right in around here, losing a little bit of momentum, but we still see like we could get another little leg up from Intel here. Dollar General down a little bit on the day, still just consolidating in this range, nothing too crazy going on there. We'll take a look. Yeah, there's not too much going on today, kind of mixed reactions across the board. You know, we see the miners doing a little bit better today, which is nice. We kind of see crypto, a bit of a mixed reaction here. Bitcoin stuck under 85,000. Bitcoin dominance green, Ethereum down. We see total 3 and others dominance down. So I'll just take a look at kind of the dominance of things to get a better idea here. So we do see dominance showing a little bit of strength, but it could still just be a potential lower macro high here. But we'll continue following this. You know, decent setup on the momentum indicators to support more of a leg up here, holding above that 50-day and 200-day moving average, which is indicative of that macro uptrend. So Bitcoin dominance looks fine for now. We'll take a look at Ethereum, Bitcoin. Still look at that. That's a lower low, you know, not able to hold or maintain that structure. So Ethereum, Bitcoin needs to do more work before we can consider it potentially bottomed. Looking here at others, Bitcoin. or sorry, the total 3 essentially. What I wanted to show, I had someone ask me kind of what I'm looking for in terms of trend reversal. So we saw up through here, this was an obvious uptrend right up into here, and then this is kind of where we reached our resistance and it reversed into that lower high, lower low, and then we kind of reversed it again. So right here we had that higher, kind of higher low, higher high. Third data point here, that higher, the subsequent higher low, that's when you would enter the position. You're in that trend, and then we saw here we came down, we rejected right there, and look at this bearish setup on the indicators showing me that we're likely to just continue down, and then that's where price action flipped, and we're just in this downtrend right now, currently at the 200-day moving average. It's going to be essential that we do hold these moving averages as support, or at least if we break below them, that we get back above them and hold them as support. Otherwise, I just think it's more downtrend kind of momentum there. Similar with others' dominance here, doing a little bit better, able to take out these highs. So watch it. Let's try to put in that higher low, another higher high, reverse that price trend structure, but also stuck under that 50-day, 200-day. So just might be due for that consolidation underneath it like it is over here. We'll be watching that and just watch that price action. Similar to what we saw over here, once we put in those lows, we got that higher low, higher high, higher low. We can enter right here because we have confirmation, and we had an oversold setup on our indicators over here right around that first low. We put our stop loss below it and we ride that trend up. So that's just what we're looking for again there. Yeah, just mixed reactions across the board. Some alts down, some are up. Bitcoin a little up for the day but kind of down for the week. And yeah, everything kind of mixed emotions across the board. The SPY keeps flipping from, you know, slightly green to slightly red. The dollar and the 10-year showing a little bit of strength. So I do think everything just has to do more consolidating, more bottoming before we can actually take any kind of major positions. Let the charts tell us what's going to happen, and then we will kind of adjust our strategy, enter positions when they start to look like we might have that bullish upwards momentum. Until then, yeah, just stay safe out there. Don't over risk yourself. Kind of recognize all the different bullish and bearish factors that could push markets either direction, and then yeah, we'll wait for confirmation and we'll pull the trigger when it makes sense. So if you like the content, please like, share, subscribe. It all means the world to me, and I'll see you guys in the next one.